We have S. Naren, the CIO of ICICI Prudential AMC, joining in to talk about all that and more. Hi, Naren, and good afternoon, and thanks so much for joining in. Are you worried about what's happening in Greece, and is that a reason for you to reduce your exposure to equities, or would this now throw up an opportunity?
Actually, we see this as an opportunity to increase exposure to equities. We are not talking about traders here, we are talking about investors here. Historically, whenever there has been a big fall due to any global reason like Greece or Italy or Spain, those have been very good opportunities to actually put money in equity. And this is again one such opportunity, because the Greece does not affect India in a material way. Even the debt of Greece today is owned primarily by multilateral institutions. So I believe that this fall is an opportunity for people to consider increasing exposure to equity. Having said that, we do believe that volatility in the near term due to Greece is likely, and in the medium term till the US interest rate hike happens, there could be some more volatility.
Naren, coming back to the markets, you don't see the global issue as resulting in a period of prolonged risk-off, which necessitates trimming of, a risk, equity exposure or risk exposure?
No, certainly not. I think the Greece problem is much smaller than 2011-12. The other countries like Italy and Spain and all are in much better situation. So I don't think this is likely to be a prolonged risk-off. Of course, there is a referendum on 5th, so there is possible volatility on 6th, but the volatility could be on the upside as well. We are clearly of the opinion that the Greece problem this time is much smaller than the Greece problem of 2011-12.
Naren, last we checked, you had cash levels of 2.8%. If you could update us on that in terms of whether you've deployed that or whether you've added cash, and in general, what's your portfolio strategy from here on?
See, as a strategy, we have strategies like the dynamic plan and the balanced advantage fund, which have a mandate to take cash calls as the market goes up. So what happens is, in those strategies, as the market rallies significantly, where they tend to underperform. Whereas on days like today, when the markets actually come down significantly, these are the kind of strategies which have the cash to buy on these downticks. So that's the kind of strategy. We don't comment on specific cash levels, but we do have these strategies which are basically strategies which are counter-cyclical, which is that as markets go up, we keep selling, and as markets go down, we keep buying as part of the strategy. We believe in risk-adjusted return to be attractive, and in big bull markets, these are the kind of strategies which are likely to underperform.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.